The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 16 February 2024. Well, I'll start off with gold. And we had quite a week, as you can see from this 5-day chart. Gold really got clobbered on the 13th here. Roughly, about 230 and all the way down to 189 or so. Quite a drumming, as you can see from the volume bars down here at the bottom, that it really sold off quite heavily. The next few days it trended sideways near that bottom, and we got a bit of a rally up to about 2,000 plus. Stayed there for a day and a half trading or so. Looked down on big volume, but a lot of buying pressure came in, and gold popped back over 2,000. So we stayed under the 2,000 level for really not very long. Like just a couple trading sessions and then back over the 2,000, tested again and back up. So gold is really showing some good resilience here. And I suspect that, as I've said before, 2,000 is pretty much the lower end. Yes, it's been below that. Could it go below that again? Possibly, but it's doubtful. This article from Yahoo Finance pretty much sums it up. Gold slid below 2,000, as I just said, first time in 2 months, yada, yada, yada. What's important here is that several U.S. officials, including Chairman Powell, said that last week they want to see more evidence that inflation will continue to decline before cutting rates. Well, a lot of inflation is already built into the system. Some of it is going to continue. Some of it may mellow and come back somewhat. But the situation, once you get this kind of inflation, is you've built a lot into the system and you've built in a lot of inflationary expectations. So if your Starbucks was $3.50 3 years ago, and now it's $7, if it stays $7 for the next year, then within that year there was no inflation in that Starbucks coffee. Yet it's still up 100% from what it was just a few years back. And these are things people remember. They know what they pay at the grocery store. They know what they pay at the gas pump. They know what their rent is. They know what their health insurance is. They know what their house insurance is. All these things that have been going up, up, and up. So there's a psychology here that the powers that be never talk about, but it's built into the consciousness of the average working people, and they are not seeing a big decrease in inflation regardless of how the metrics are derived. So I think there's still going to be some more inflationary pressure. I don't expect to see rate cuts probably till after May. Could be wrong. Is it going to do any good is the next question. I mean, if you do 50 basis points, 100 basis points, 0.5%, whatever, what's it going to do? And the answer is, I don't think it's going to do much. And that's a problem for the Fed, other than probably cause, the inflationary assets such as gold and silver to go up further. And if we look at the silver market from last week, we saw the big down just like gold. We saw it flat just like gold, but silver actually rallied, flattened out, and re-rallied. So there's silver showing some strength here. Almost everyone in this precious metal space thinks that, silver is the worst thing to ever touch. And in some ways, you are entitled to that opinion, of course. But silver's actually showing strength, and usually on a big rally, it leads gold. I know that most people think that it follows gold, and in some cases it does. I'm not really concerned with who leads. Gold is obviously leading. It's closer to its all-time high than silver is by a long shot. Silver's got a double here just to get to close to its nominal high of $50, whereas gold, in the 2100 range, it's in a new high territory. However, I do like the fact that it's showing strength. The gold-silver ratio is finally dropping from something like 91. And you see on these buying moves, you've got some pretty good volume coming in, most of it being green with this buying pressure. This rally at the end of the week here, you can see, was, again, big volume and almost all green, which means a lot of buying pressure. So let's see what happens. I'm not going to be happy until we see silver near 30 and then see what happens from there. But quite a ways from there, but all rallies start from like, I don't believe it, I'm waiting for a pullback, and then I'll buy some more, and it just goes up, and then it might pull back slightly. That's not enough of a pullback, and people watch it go up and sometimes get away from them. I'm not predicting that. These markets have been very, very tough, and probably will continue to do so. But don't let the sleeper silver get away from you if you don't have a position. This is an article from Shift Gold, basically talking about the gold silver ratio, stating that silver is still cheap. You can read the article, obviously, talking about silver being at 26 last year, around 22 now. Of course, it just shows you rallied above 23 by the end of the week. And here's a chart of the gold silver ratio. It's come down from the 90s. And so this actually would be showing a slight downtrend here right now. But you can trade the ratio. If you're overweight gold, it's not a bad idea to swap gold to silver right now and swap back when the ratio gets below. Pick a number. You could be conservative and say 70. I think you're going to get back to what we've already seen in this bull market, which was a ratio of 33 to 1. That is a long ways from where we are right now. Resource World magazine, precious metals analysts are optimistic that 2024 could be a stellar year for silver. And of course, that may be true. It certainly didn't do anything last year. It was off 1%. Gold was up about 13%. But I really do want to see silver confirm gold's move. And I think that will happen this year. This is from Mike Dorenzio, who's the head of the Silver Institute. We think silver will have a terrific year, especially in terms of demand, said Michael Dorenzio, Silver Institute. In a recent interview, he expects silver to reach $30 an ounce this year, the highest level in 10 years. On February 7th, 2024, spot price was $22.26. And this is from Mining MX. South Africa's platinum group metal miner has hit rock bottom, hopefully. And I agree. I really think, as I've said several times on these weekly perspectives, that platinum is really probably your safest bet right here. Silver's probably got more potential, but nonetheless, really platinum is under the cost of production on the spot market in almost all cases. Not every case, but almost all cases. So got some patience. It's a pretty safe bet. I wouldn't recommend going into platinum if you don't have gold and silver. I mean, gold is the most liquid precious metals by far. Silver's a close second, and then platinum is much more difficult. You pay a high premium going in, and you pay an exit premium. Usually you get discounted to spot or below spot on the way out. So bear that in mind if you're inclined to take up platinum. The good part I like about it is all the dynamics are set up for a pretty good rally in platinum. It usually trades at a premium to gold, hasn't done that in years and years. I think once this next rally takes hold, which will probably be in the second half of this year, you will see platinum probably get on par with gold. So, if you're a risk taker, you might think, well, I'm buying gold at half price here. I'll swap it into gold when the price reaches par or close to it. That may be the case, but just because that's what I think will happen doesn't necessarily mean that's what will happen. And all these metals move together. I mean, not one for one, but there's a high correlation between all of them. And platinum, of course, sold off just like gold and silver at the same time. Pretty much just down, down, down. And then what we saw was a rally up, consolidation, and Friday it went up again. So very similar to what silver did. And according to FX Street, platinum needs a break above 1,000 to mark the beginning of a bullish trend. I agree. There wasn't much of the article, just a few quotes you can see. But we do need to get over the 1,000 level, really see a breakout, and I'll just confirm that. Just to finish out, this is from my Twitter feed. Tavi Costa talked about Newmont and how undervalued these miners are. They truly are. In fact, he points out that the dividend yields are now at one of the highest levels in history, and that's true. I'm scrolling slowly, don't want to make anyone sick. Bob Coleman pointed out that the SLV just went to a big discount to the net asset value. That rarely happens. Explains why. Here's one that I posted. This one I think is interesting. I asked the question, value plays. Drunken Miller drops Abidaba and Amazon and picks up Barrick Gold and Newmont Mining. And that's pretty interesting. I mean, Druckenmiller is known to be quite savvy on timing and the market overall, et cetera. So when he's dropping some of the, let's say, more favorable leaders of the pack in the tech sector and picks up miners, I think that's something to pay attention to. Have we hit bottom? Don't know. Probably. I know we're close enough. that you can't get hurt very much if you get in at this level, especially for some of the top tier cash-rich unhedged mining companies. And a lot of these gold companies actually have pretty good margins at $2,000 gold. And yet no one other than, to my knowledge, no one other than Druckenmiller or a few others are actually taking advantage of that at this time. So if you're bold, now's the time to take a look. You want to buy when no one else wants it. No one likes the miners right now. There's not everything I did this past week is on the blog yet, but I interviewed with Duncan Kaiser of Liberty and Finance and talked about silver coming out of the COMEX, the LBMA, and the ETFs, and also the price situation when we're seeing all this silver that's leaving these facilities. So it's if you're interested, it's worth a look. I'll have our webmaster put it up on our blog so you can find it, but all you have to do is go to the Liberty and Finance channel on YouTube, and it was done, I think, on Tuesday this week, a few days back. You might want to look at the fundamentals as far as how much silver is really being taken off the market, primarily for solar and, of course, investment as well, but primarily to industrial use. So I'm going to wrap it up here. This is David Morgan of themorganreport.com for the Weekly Perspective. I will be back with you next week.
What if I told you that you could go broke in less than 24 hours? That's how long it took for the Dow Jones Industrial Average to plunge by nearly 22%, losing investors billions overnight. The same happened to the FTX crypto exchange and Terra Luna stablecoin. Both crashed overnight, losing crypto investors billions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history, and you must understand the following. You can absolutely go broke in one day. We've been helping subscribers weather this economic mess for years. Now it's time for you to get the same insights. What really happens during a major collapse is that the wealth changes hands. You will actually benefit by looking ahead and knowing exactly how to build and preserve your wealth. Putting just 10% or 20% of your wealth into our approach could make all the difference in your financial security and peace of mind over the next few years. Discover the Morgan Report today. Visit our site at themorganreport.com.